some of the brokers that are doing really well are the ones that have, or doing, when I say doing really well, I mean, they seem to be able to weather the storm, is that their fixed costs are really low. They got into the market, or they started this business, or they just kept their fixed costs really low.
That's right, yeah.
And so even if they have a down month or a down 5 or 6 months, they can still survive.
Yeah.
But you got businesses that have much larger fixed overheads and lots of team members and lots of employees and payroll tax and all this kind of stuff. It does make it much, much harder when you experience a down period to kind of weather that storm. And that's kind of what a lot of people are saying, is that, yeah, things have got harder. You're feeling like you're working so much harder to get the same result that you once were getting, you know, much easier and with sort of less effort. Julian, CEO and founder of Loan Options. Today I've got a very special guest and also our office neighbour here with.
Good afternoon. It's Samuel Falanga from Falanga Co.
Thank you so much for joining. Probably a bit overdue.
Thanks.
You know, we've
been neighbours for a while.
Yeah, and you know, it's been pretty good. We've obviously had you guys over for a few of our events and stuff like that, and hopefully we're pretty good neighbours. I don't know.
We haven't had any complaints yet about the noise.
All right, that's good. That's good to hear. But, you know, one of the reasons, I think it's very timely. There's a lot of stuff going on. There's a lot of businesses out there probably doing it a bit tough. There's a lot of the businesses that we work with as well. Some of them are either doing really well or, you know, sort of, you know, seen better times. And I think that kind of speaks to a lot of people in the market. There isn't really anyone who's just lukewarm at the moment.
Yeah.
You've got businesses that are doing really well and thriving in the current conditions, or you've got businesses that are kind of struggling. So really wanted to have you on. And
I appreciate that.
Tell us a little bit about what it is that you guys do, and maybe even if we rewind and start from the very beginning, how did you get into this sort of industry and this line of work, and the story of
Falanga Co? Yeah, so totally agree with you that there's businesses, you know, some are doing really good and prospering, others are finding it very difficult. Falanga Co was built back in 2010. I used to work for a large chartered firm in town called Crowe Horwath. And I was working on, you know, several hundreds of $1,000s worth of accounts. And I come from a background of small business, you know, in the transport industry. And I was, you know, realizing that the smaller guy wasn't getting the advice that, you know, the large corporates were getting. So in 2010, I was given an opportunity to take over a firm in Leichhardt, which was 3 partners at the time. And that sort of, you know, gave me an opportunity to help out that small business and go back to my roots. And, you know, my stepdad, like I said, was in transport. Trying to give him the same type of advice that, you know, clients were paying $50,000 to $100,000 a year for. They were always, you know, wrong, structured incorrectly, being sole traders, or weren't getting, you know, superannuation was always late because they weren't getting reminders. So I took that opportunity to take what I've learned, you know, doing my graduateship in Crowe Horwath, and then apply that from the day to day. It was tough at the start, don't get me wrong. When I took over, I didn't have any accountants. I only had one administrator. Obviously, cash flow was tight starting out. Making sure that I had to, you know, get enough income to pay myself what I was getting paid before. So
it's actually a common trend. Like, we work with a lot of accountants, and, you know, we have like referral partnerships with many, but whenever I talk to them, the one thing is they're always really good at teaching people how to collect money and make money in their business, and, you know, get the business model right and things like that. But they're always very bad at collecting money that their businesses owe them. And part of it is like, oh, they're good for it, and, you know, there's a lot of trust there, but you know, it is one of those things where, you know, for whatever reason, people associate their accountant with the tax office, and so because they
get paid last.
That's right. That's right. And so because they don't like paying tax, anything associated with paying tax, like paying your accountant, actually falls out. But I think the problem that businesses have by doing that is that then they get deprioritized from consciously or subconsciously. If you're somebody that you're a really valued client of your accountant, he's going to put a lot more time and effort into your business to make sure that you you are staying with them, and you're going to get the best advice, and you get a lot of interest and engagement in your business, and making sure that your business is set up properly. And, you know, things change, right? Like, a lot of businesses grow, and then the way they were structured on day one is good enough to a certain
anymore,
point, but
yeah.
it's no longer relevant.
Yeah.
And then you have companies that build, whether it's intellectual property or whatever it might be, and they need to have a corporate structure that protects, and we'll get into that a little bit, and not expecting you to give it all free advice here, but what are maybe we can kind of talk about what the common mistakes are that you see businesses make and how some of those could be prevented.
Yeah, so I think early on, you're setting up a proprietary limited, a company per se, and you always put mum and dad or the operators as the shareholders. Sometime it might be beneficial to make the shareholders maybe a family trust immediately. So you're separating out the asset value from yourself, because unfortunately, especially in building and construction, a liquidation might mean that, they take your shares. Just to sort of add that extra layer of protection, accounting 101 is to separate your trading entity from your asset holding entity. So as you do and the business grows, you might have a separate entity for the motor vehicles, or we've got one where it's a pub and the lease is actually held under a separate entity as opposed to the trading entity. Again, just separating, your assets against the trading entity. So you don't want to trade because just in case something, above and beyond your insurances happens, and then you've got to close down. And that's where we sort of see clients come in and they might be structured incorrectly. Like anyone in building construction would be silly to be a sole trader just because of potential liability.
Yep.
If I started again, or we say, if you could start again, you'd probably put all the assets under mum, but the trading entity under dad. He's the director and the shareholder, just in case, again, that they might not be able to come after the personal assets. Because we have seen that recently, unfortunately, because of cash flow issues equals ATO debt. ATO's putting a firm stance on a lot of companies at the moment with statutory demands or director penalty notices. Yeah. So they've been going through. And again, if you separated your assets from day one, you have that available option where the creditors can't come after your personal assets because they're held under a separate entity. So getting that right from the
sense, right? That makes a lot of sense.
And getting that right from the start at no value when the company's small, because you're setting it up correctly from the start is probably the best way. Otherwise, you need to talk to your accountant in regards to the value and moving the shares across.
And, obviously, in terms of the industries that we spoke about, some doing really well and some struggling, but where are you seeing some of the opportunities in the market? Which businesses seem to be doing? Are there specific industries or types of operations, in terms of size? I'll just give you an example. Some of the in our industry, some of the brokers that are doing really well are the ones that have, when I say doing really well, I mean, they seem to be able to weather the storm, is that their fixed costs are really low.
Yep.
They got into the market, or they started this business, or they just kept their fixed costs really low.
That's right, yeah.
And so even if they have a down month or a down 5 or 6 months, they can still survive.
Yep.
But you got businesses that have much larger fixed overheads and lots of team members and lots of employees and payroll tax and all this kind of stuff. It does make it much, much harder when you experience a down period to kind of weather that storm.
Absolutely.
And that's kind of what a lot of people are saying, is that, things have got harder. You're feeling like you're working so much harder to get the same result that you once were getting, much easier and with sort of less effort. But are there specific industries or business sizes that you're seeing?
We always see good profit when it's a one-man band or a couple of employees because they can manage everything. Then if you're sort of, 3 employees up to 10's very hard. And that's where most businesses maybe potentially fail or go into the cash pitfalls because they haven't got the operations or the SOPs, the standard operating. They haven't put time into their operations where it's like, how do I scale? Then once you probably hit about 15 employees up, you've got that. You've got your operations, your project managers in place, your general managers involved. But in between that 5 to 10 is very difficult because you're trying to be a small business and trying to manage everything. And I had to go through that personally ourselves at Falanga Co. You're trying to be everyone's everything, and then you've got to sort of step away and allow other people to do their job once you find the right person. And then once you put all of the operations and the processes in place, then it seems to be a bit easier, where then you can grab that superhero file that's been, I wanted to do this and I wanted to do that and I want to automate this. And then you can put those into action, because before, like for us, it was always just do the BAS, do the tax return, do the BAS, do the tax return, answer the call, do payroll tax. It was always a lot of compliance for us.
Yeah.
And now I'm starting to see the benefit of, that growth and that scale, because we do have the right people in place to allow myself to do even like this podcast. I wouldn't have got 3 hours spare on a Tuesday or a Wednesday 3 years ago. So yeah, in terms of the size, I think that sort of ticks that. In terms of the industry, obviously, you've seen in the market, hospitality's, not doing so well. When you see interest rates, the 12 steps that they went, the 0.25s, very quickly, the spending of the consumer goes down. Now, unfortunately, all of the luxury items get pulled back first. So going out for dinner and spending large amounts of money on dinner or going out for drinks gets cut back first. And at the moment, the hospitality clients are feeling that pinch. Anyone in terms of automation or a subscription based in terms of software is doing really well, because they're just recurring rev, right? That's the goal, not only from a cash flow perspective, but also on a valuation model.
Yeah.
So if they are looking to exit later on, again, when they're, like a business that's been around for a little while and they are looking to exit, then if they do that, have that subscription model, their valuation just goes through the roof. Yeah. Instead of being 2 times, it's more like 4.5, 5 times.
Yeah, and in some cases a lot more than that too, right? It depends on what sort of industry or sector they're in and the growth and all that kind of stuff. But it's I think you kind of hit the nail on the head there. The hospitality business, I first realized how bad it was when I tried to go on a Friday lunch in the city.
Yep.
And it was like 3 o'clock or 3:30, and so a lot of restaurants would normally have, that break between lunch and dinner.
Yep.
But like in the city, not really. Like everybody knows Friday long lunches. Like it's a thing,
Thursday
right?
and Friday long lunch.
Yeah, and I remember I went to like 3 or 4 restaurants before I actually managed to get seated at a table, and I was like, shit, like things aren't that good if, you can't walk into any restaurant in the city and they're open for a long lunch and they're not open for a long lunch is crazy to me. And that was the first time I was like, shit, like I think things are a lot worse than we've kind of been led to believe. But a lot of people changed their business models after COVID and all this kind of stuff. But the reality is there's always so many people around the city that it's crazy to be closed between those times, because, like how many other people walked in or tried to walk in or tried to book, a lunch. And, I think when you're doing meetings or whatever, if I like to make the most of my day, but I know that other people on a Friday, maybe at 3 p.m., maybe don't want to be seated in the office in a boardroom. So you kind of gear your Friday to go, okay, well, maybe we're going to get a bite to eat or something like that. And
in terms of meetings, like you said, it's the best way to build rapport too, right?
Yeah.
Rather than a bourdroom, you'd go out for a bit of a drink or a coffee or a late lunch.
Break bread or it's a good thing to do. But I'm trying to get a restaurant, a spot on a Friday at 3 p.m. It should be fairly easy in the city, and there's parts of the city that just stay open and there's no issue. Like probably on the wharf there, at Barangaroo, and there's heaps of places open that just stay open. But in a city, it was pretty difficult. So anyway.
Got to remember the hospo clients got hit with, super going up. They also got an increase in award wage. So they got hit, during that period of like a triple whammy, and also reduction in spending.
Yeah.
But now I'm starting to see in the market, like the next generation, unfortunately, can't afford a mortgage in Sydney. So unless they're high income earners with a partner and they're both on 150, it's very hard, and they've got a substantial deposit. And you know better than me, but the next question for the next generation is, where do they put their money? Where do they put their 50 grand or 100 grand? Because they won't be able to go out and get a loan. So do they spend it is another question, or should financial planners be changing, their target market rather than thinking about just retirees and sort of just, advertising more that they can help that 20 to 30-year-old in a managed fund or something like that.
Yeah, it's a good point. And a lot of people will probably start, using that money to fund their own businesses. So, because I think realistically speaking, in Sydney, the only people, unless you're a CEO of a big company or you're an executive or, in the leadership team of a big company, it's really hard to get ahead unless you own your own company.
Yeah.
There's some industries and some roles where people can make great money and, all that kind of stuff. But yeah, if you're talking about having a mortgage in Sydney and the average mortgage side is pretty big, and then raising kids.
Yeah, on top of that.
Yeah. And if you've got a young family, like the missus is going to be out of work for a bit. So
that's
like
right.
it's the only people that really getting ahead are people that sort of start their own business, or if they've managed to work their way up the corporate ladder
or they've got a big inheritance coming as well.
Yeah, or there's that. But I think
we wish, right?
That's kind of the maybe the sort of very small sector of the population that get those sort of those benefits. But it speaks to, like, obviously there's a few things going on now. There's tariffs and all these kinds of things. There's a bit of uncertainty. I think the net result of that, and we're already seeing it in some of the markets, is that rates are going to come down much faster than initially thought.
Yeah.
And I think what that's going to do is probably provide some relief, or provide some, provided the costs of other goods. And I'd need to look a bit closer about which stuff we're getting in specifically from the US. But China has been hit with the tariffs. We're going to get a lot of stuff from China because they won't want to send it to the US.
To the US, that's right.
So we should be well positioned as a country to take advantage of reduced costs.
Yeah.
But there's still a bit of uncertainty. I think once people start to see rates starting to come down more consistently and more rapidly, I think businesses will hopefully get a bit more confidence and be more in growth and expansion mode again.
Yeah.
Right now, it feels like from all the businesses we're talking to, a lot of people are playing defense and trying to protect their capital, and they feel like at the moment they're just running on the treadmill and they're working for the ATO. And it's kind of, we're trying doing what we can and just sort of hosting some educational webinars and different things like that. We had a small business restructure specialist come in and join one of the webinars and talk about businesses when they feel like they've been issued with the DPN and
they have no other way out.
It's a small business restructure, and then sort of protect your family assets from being held liable. If you, a lot of sort of directors and stuff, they'll have the family home. It's in their name, and you mentioned ways to sort of prevent against that. Have it in the missus, or have it set up so that there's trusts in place to hold assets, or asset holding companies. But a lot of people haven't done that, and the problem is when you get to a certain point, and then things are spiraling in the business, very quickly you're going to have $50,000, $100,000, $200,000 in ATO debt if you haven't managed it properly.
Oh, absolutely, very quickly.
And you haven't been honest with yourself about making the tough decisions really quickly. And that's why I think having a really good accountant is so important, and having good advice and people that you can sort of lean on and go, the business model is changing, or new competitors in the market, and retest the business model and see if it works at half this scale or twice the scale or whatever it needs to be tested and modeled. And if you've got a really good relationship with your accountant, it is good to build things like cash flow forecasts. It is good to make sure that you're taking care of all of your compliance and super and all your other obligations. Where businesses get stuck, I think, and just the businesses that I speak to, obviously you're seeing a broader set in your line of work, is they don't sort of provision their money properly. They get revenue in and they think, okay, I can spend that, and they're not taking out money for GST, not taking out money for things.
And it's such a simple thing that you can just easily work out a percentage of what should be put aside in a separate bank account. Yeah. And you just got to remember that that's not your business's money. It's the ATO's money. It's the government's money that will one day be payable. Yeah. We're fortunate to work with, a few hundred business clients, and we do see a lot. And that's probably the one thing that they all struggle with is forecasts. Yeah. They never look forward. Accounting historically was everything was 3 months old or 6 months old or 12 months old. Like you're now doing, we're in the April of 25. You're looking at doing 30 June tax return. So historically, everything's been historical data. You need to be able to, sound check some of your ideas with your advisor, which should be your accountant, and not be intimidated or, worried about if they're going to charge a fee for that advice. If your accountant's not your second point of call after your wife or your spouse, then you need to look at who your accountant is for you. If they're just sending you compliance obligations and, doing the March BAS in June and things like that, and you want to grow, you have the wrong advisor in that space. We prefer that clients ring us. They're thinking about future things. They're thinking about how much they should invest in marketing. They're thinking about whether or not they should buy a commercial property. They think about Ram versus a Toyota Hilux and the costs involved and just forecasting what that's actually going to be. That's where we get the joy out of being advisors, not just accountants.
Yeah, amazing. No, I think that's spot on. And I think one of the other things is like businesses, I heard a pretty troubling stat is like, or if you wouldn't even call it a stat, but like all businesses at some point exit. They either exit forcefully, like i.e. they get wound up, or they do have a successful exit and they sell the business, or they, pass it down and, to sort of,
pass it down to their kids sometimes.
Their kids or key people
over
in the business, whoever it might be, and then kind of step back away and, still remain a shareholder or whatever the situation is. But like, there's a lot of businesses that are ill prepared for that type of situation. You spoke a little bit about like SOPs and having the right procedures set up and everything documented and stuff. Where do businesses fall over when it comes to trying to exit their business? Is it, and what are the things they can do, the steps they can take to improve their chances of having a successful exit instead of being in the situation where they get forcefully wound up? Yeah,
so you can't be a control freak to start with, right? You can't be everything to everybody. You have to let go. You have to let go of you considering that they're going to do just as good of a job as what you did because they don't own the business. If you are looking to, you've got that key person, you could do an employee share scheme where slowly they can earn in or they could buy into the business, making, them a little bit sticky as well for the long term. But making sure that you're structured correctly in terms of, the shares so you're able to sell those is probably one of the key recommendations there. If you want to totally get out, then making sure that, you might be planning to get out, say in 2 years' time. So we've got a client at the moment that we're dealing with. He wants to sell for about 12 million in 5 years' time. At the moment, we're doing a restructure where we're selling the shares at the moment to a holding company so we can take advantage of small business CGT concessions. Yeah. So again, it's forecasting what the client wants to do. Now that's not going to be identified when you just send them a BAS and then a tax return and a BAS and a tax return. You actually have to sit down and talk about their goals, what they want to achieve. Are they looking to exit? Are they looking to sell down some of their shares to their project manager or something like that? So to identify those with the client is probably the most important. We always sit down with the client and say, what's on your agenda for the next 12 months? Have you thought about marketing? Do you want to grow? Because some people don't, right?
Yeah, some people are really happy. And
even with the advice.
There's nothing wrong with that either, right?
Correct, because they're making some good money.
They're making good money and they still have a good balance, family life and all the rest of it. And so, there's nothing wrong with that. There's no right or wrong way to run a 100%. Business. As long as it works for you and your goals, then I think that's probably...
Yeah, we've got clients that, want to own 10 properties by the time they're 55. Get that passive income. Others are, like you said, they're pretty comfortable with where they are and where their life and their work-life balance is at the moment. And again, it's not for everyone to grow. It's not for everyone to automate. We try to influence it, of course, to make their life easier. But I remember trying to implement Xero. Now, obviously, most small businesses out there at the moment are using Xero as the accounting platform, right? 5 years ago, it was, some of the older guys didn't want to implement Xero. They wanted to just stay in their ways.
Spreadsheets.
It was all spreadsheets and paper docs and that transition over the past, since I've been doing this for 15 years. Now we're seeing they turned around, we had a Xero Mastery event not long ago where clients came in and I remember meticulously that one of the clients said, I love Xero. And she was adamant she didn't want to use it. So again, it's about recognizing that they need to change.
Yep. Yeah, human beings are hardwired to not like change.
Of course.
Even our immune system is wired. Like if somebody gets an organ transplant, they have to be dosed with immune suppressants, literally, because their body wants to reject the change, and their body will attack the new organ. And that kind of tells you everything you need to know about how people feel about change. It's literally, even in our business, like we bring in a new process. This is a real story. We're bringing a new process or a new system. Immediate response, and our team's young. Like average age is
I've seen
30.
them all.
They're
I've seen
young,
them all.
right?
Yeah.
So you would think, that saying like you can't teach an old dog new tricks. You can't teach any dog new tricks. Like you obviously can, but it's a slow process, and change management's always difficult. But real story, we implement a new technology solution. Team, initially has some whinging and things like that, and there was an integration with a previous CRM that wasn't perfect. So we're like, you know what? Let's just wait. We're doing a CRM migration.
Yep.
Let's wait till the CRM migration is finished, and then we'll
introduce the team,
the system back out.
Yeah.
And as soon as we took it away, they all complained that we'd taken it away because like they'd used it for 2 weeks, saw the light, and the initial response was, this is, But that's just the truth is like they'll complain when you introduce it, and then even though it's making a pretty big difference to their thing, if you were to take it away again, they'll complain that you took it away. So
100%.
it's just one of those
with
things.
us, like, it's very important that super's paid on time.
Yeah.
That's why the ATO brought in, super clearing houses, because now you don't need an individual employee to complain that you never paid super. The clearance houses are reporting to the ATO.
Yeah.
So now with Xero, you can, press a few buttons and then the direct debit comes out automatically. So that the process is simple, right? We're probably going to see the transformation of that being in PAYG. So the withholding tax of your employees will automatically come out once you process your single touch payroll. These are the things that, again, no one's going to like the change because they're going to go, I want to pay it when I want to pay it. But as soon as I process that, the ATO is going to take my money. It forces them, instead of putting it in that separate bank account like we said before, it's just going to take it out of the bank account. Because that's where we see, unfortunately, people fall behind. Then before they know it, 1 quarter turns into 2 quarters plus some super, and it could be hundreds of thousands of dollars within a 6-month period. And they're always waiting for the payment to come in, especially with building construction clients, because they're waiting on that big lump sum to come in and they're going to clear all their debt. Unfortunately, if that big lump sum, due to that they have control over, doesn't come in and their client liquidates, their whole business that they've been running for years falls over. Goes to shit.
Concentration risk is a really big one as well. Like, how do you normally advise clients? Because like I see this all the time as well. Like, I've got this contract and I'm getting so much business from it, and I'm just looking at it going, if this company decides that someone can do it $1 cheaper than you, and you're literally putting all your eggs in one basket. Yeah. And we know historically that's not ended well in more cases than not. But how do you try and help your business clients understand how important it is to spread their business across and try and have more than one major client and reduce their concentration risk? Yeah,
so again, just going through, the different service items that the client offers, and then having a look at, like you said, that specific client. We've got a transportation company at the moment. Now, they've been growing and growing with the one client. We've actually worked out that it's probably, close to 63 or 64% from the one client. Yeah, wow. And like you said, they're going to now put all of their freight to tender. If they're $1 over, they're going to lose all of that. So he's built up his whole business, including all of his, trucks aren't cheap. Prime movers are $300,000 or $400,000, right? And then the trailers on the back are about $100,000. We've then said where the founder needs to direct his attention to, now that the business is running by itself, the partnerships that he needs to spend time in and go and work on the business, not in it. That one-liner that everyone likes to use, but start to develop those partnerships with other freight companies. Because otherwise, like I said, for $10 cheaper on, a trip to Brisbane, and they do it, 400 times a month, is substantial to their client.
And so we spoke a little about tech and automation. So what's the state of sort of AI and the disruption that's coming to every industry? Like what are the most recent exciting new tools or technologies that you've come across at expos or, whatever it might be, or even just stuff that you're using in your business as well? Like,
so you remember accounting used to be you get bank statements, you code them up, and then Xero came in with bank feeds. That was massive for us because I used to sit all day processing bank statements. Not enjoyable. The new generation is so fortunate not to have to do that stuff. Now we're seeing in the last 2 or 3 years, email responses coming out automatically. So, we're seeing more in direct debit or getting paid faster is important as well. In our own space, we're starting to see, bank rules being put in. So if it says Bunnings all the time, that it's obviously can get allocated automatically. More importantly for that is, and that's why we're more of a coach. We need to be more of an advisor than an accountant, because in the accounting space, if the transactions are done automatically through AI and the BAS is automatically generated, where do we see ourselves? So we've put ourselves in the next, 12 to 24 months to learn a bit more in-depth one-on-one with the clients, to sit down with them and teach them like a virtual CFO scenario where we sit down every month with some of our clients and we go through their numbers direct, and we also help them forecast because they are probably a good technician. So if they're in NDIS or they're in transport or they're in construction, they're a really good technician, but they're not so good with numbers. And more than likely they don't forecast. They don't look forward.
Yeah. Yeah, I think that's very common, certainly with the business owners that and I think, everyone's so caught up in the weeds of the day-to-day minutiae. They're so like busy all the time that it's really hard to stop and go, you know what, I actually need to do some 12-month, 36-month planning and map out where this all leads. If I'm growing by 5% month on month or 10% year on year, like it doesn't matter what the number is, but where does this end up? And what are the right points to hire people? When do I add the next person? What's the right headcount to revenue ratio?
Correct.
All these kinds of things. And I just think that if you can create like rules for your business, that will ensure that you never, because costs are not linear, right? They're almost like steps. Like your
in
costs,
terms of growth, Yeah,
in terms of growth. Yeah. When your costs grow, they're usually in advance of when you see the revenue.
Correct, of course.
So you add costs in anticipation for additional revenue, but there's sweet spots, and that's why all these consulting and accounting for like the big ones, they always talk about right sizing businesses, right?
Yeah.
And the reason is because of that kind of the incremental steps of the costs. And so there is a sweet spot right before the increase in costs where the business is most profitable for that revenue number. But businesses, they really, they don't actually properly plan to understand, okay, well, I need to make sure that my headcount never, or the ratio of my headcount never exceeds X, Y, Z.
Yep.
And so as long as I follow that rule, I'm never going to be out of balance or out of whack with, having too many people. Because then the downside of that is like you have to let people off if things don't go or whatever. Right. And nobody wants to do that. That's not necessarily the funnest part of business.
A lot of the small businesses, if you're trying to tell them to get your time back as the founder so you can work on bigger things, you're going to have to employ someone, which comes at a cost. Sometimes that conversation doesn't go too well because you're like, no, I need to make money.
Yeah.
But you're exactly correct, because unless you employ someone, so we've gone through that, in our journey at Falanga Co, you have to employ people in advance to know that to fill the future capacity.
Yeah.
Otherwise, you get the capacity, then you let the clients down based on the work, because then you're trying to fill the role.
Yeah, and it's the wrong way to do it, because you need to ensure your service levels are high.
Correct.
But also, people take time to be trained and to pick it up. Like nobody starts and on day one they're a superstar, right? I mean, I would love that, but it's just not realistic. And to put people through proper training and not throw them in the deep end.
Yeah.
Like if you hire somebody and drop them in and the demand's already there and they're already being
they won't have the time to learn.
They won't learn properly. They'll pick up a whole bunch of bad habits. They'll do things that potentially need to be undone or are very hard to be undone later. But yeah, is there any particular technology, like Xero's doing some cool stuff? Are there any other like, accounting software pieces or SaaS products that are coming out that are like exciting? You're like, can't wait for that? Or is there anything like really cool or exciting happening?
I think, Xero's just purchased Sift. So it's a reporting platform. So again, as long as it's, mapped correctly in the IT world, that the data's coming through correctly, then, the founder would be able to generate a report very quickly and, digest the numbers instantaneously.
Yeah.
I think that's vital, that any small business owner sets time aside every month to have a look at not only the last month, but also in the next 3 months. It's very hard to routine that because they're always busy. They always want to go to soccer training but I find it, if they set that time aside, maybe for a client call or an accountant call to sit down with them, they should be at least doing it every month. In terms of the softwares, not too sure about, what's coming out. But because it's forever changing.
Yeah.
And there's many out
one
there.
tool I do like is called Fathom.
Yeah.
Fathom, you can build your own reports. It connects into Xero, and then like the data's all live and stuff. But it can give you, all kinds of different reports and show you where your sort of break-even point is.
Yeah.
And like to me, that stuff is really cool because like a lot of people pay lots and lots of money for reports, and they're getting less. They're getting less than what these reports can provide, if that makes sense.
Yeah.
It's not giving you advice, but so you still need your tax professional, you still need your advisor, but it is good for you to be able to see your numbers at a high level like that, and then you sit with your advisor and digest them and understand. Okay, well, here's your fixed costs, here's your variable costs.
Yeah, to go through that.
Above your fixed costs, increase for every dollar you make above your fixed costs is 30 cents you need to account for.
Yeah.
Your variable costs, and there's all those kinds of things. But I really like that tool. I think it's a really cool one.
So Xero bought Sift because of Fathom.
Okay, yeah.
So we use Fathom for a lot of our clients, and now with this introduction, which we're planning that it's going to be for free with the Xero subscription.
Oh, cool.
One of the advantages of Sift will be that it can report weekly, where some of our clients at the moment through Fathom it's a monthly report.
Yeah.
That's probably the reasoning for why they've integrated that, because Fathom will now have to change in terms of what it offers consumers because of that implementation. But yeah, it's the same.
Competition generally is good though, right? Now,
and it's better
Fathom
for
has
us
to get better, and then
Sift will get better,
and then before you know it, you've got. But yeah, I think there's an element of like regulation that accountants need to follow, which whenever I think of which industries are the most protected from AI and disruption, I always think about heavily regulated industries because there's so much liability or potential for litigation, and if an AI thing gives the wrong tax or accounting advice to someone, who pays for that, right? It's
it's the individual at the end of the day. You're signing off on your own tax return, so it's your liability. So if you've got it wrong or AI's got it wrong, because AI is not perfect.
I just mean more on the advice side, like not necessarily the compliance part, but like, let's say you get some people that get really creative and create an AI accountant, right?
Yep.
Or a financial advisor. And then that AI advisor tells them to go and put all their money in fucking speculative
spec stocks.
Like some Wolf of Wall Street style stuff, right?
Penny stocks.
Then it goes really bad. I feel like there's going to be an element of disruption that is slowed by regulated industries, like as far as things like e-commerce and whatever. Like AI is already disrupting those. You can create an AI e-commerce store, can do all the research for you, can go and find where the search demand is for certain products, show you trending products, and then you can create a drop shipping product, and then the business basically just runs itself. I feel like anything that's super regulated, financial services, I've spoken about this before, I do think that right now there's enough technology available to do what, let's say you gave me 10 additional engineers. By the end of this year, I could have automated exactly what a broker does.
Yep.
No doubt in my mind. There's nothing like particularly special about what we do, speaking as a broker.
You're giving yourself a bad rap now.
Well, here's the thing. It's like relationships are really important, but
of course,
that's the part that I think will last the longest, right? People want, but like I'm just talking about like a car loan for 50 grand. A computer could do that way better, way faster, way easier if all the correct automations were built in.
Yeah.
Now, there's some delays on like the lender and the bank side and those kinds of things where, they don't have the necessary technology to accept via API.
Yeah.
So you can't really automate. Someone still has to key in
well, not yet anyway.
But if you had enough resources, you could build workarounds for all those things, right? It's just, they're not the most robust solutions, but there's workarounds for everything. But yeah, my point is like, if you don't think that super intelligence can do what we do, you're just kidding yourself. And from my point of view, it's not giving our industry a bad rap. It's just like what we do is interpret lending credit policies.
Yep.
And then we communicate with the client, and some brokers don't even do that well, the communication part.
Yeah.
And then we communicate with the lenders. Some brokers don't do that. The amount of times I've heard and BDMs have spoken to us and said, or got off the phone from another broker and just gotten absolutely abused for absolutely no reason. So like, what is the most difficult part? The most difficult part is trying to replicate the relationship side. But I feel like the relationship side is only necessary if the product, like, do you need a relationship manager for your internet banking?
No.
Because the experience is mature, it's good now, right?
Yeah.
If you spoke to many people, like they would have said, I would never put my credit card information in an online store and buy stuff online. I'll never do that. And why? Because I like going and trying on the clothes.
Yeah, that's right.
Like what about, it doesn't matter what it is really. There's so many different examples of this. Like people said they were never going to do internet banking.
Yeah, and now look, you can't. Like the internet goes down for 5 seconds. They're
closing branches, man.
Yeah.
They're closing branches. Like, the branches are totally irrelevant in a lot of cases. And, so like a lot of this stuff is inevitable. BlackBerry swore that everybody wanted physical keyboards. You know what I mean? Look where they are now.
Yeah.
And it's like the same thing with Blockbuster and like Netflix. Like the same thing. This history just keeps repeating itself, and people always say the same things like, oh, AI can't replace me because I'm so special or whatever. And it's like such a naive thing, such a naive way to think. What people should be doing is like, how can I leverage AI to give my clients a better experience, to build more value for my clients so they don't want to use just a computer. And that's how I think a lot of businesses have to think, is like, what additional services, what additional value adds can I provide that, AI by itself can't? Or how can I make myself irreplaceable to my client through a fantastic relationship? And if you're just ticking the box and sending the badge,
if it's transactional, you're going to get beaten by that.
I think so.
That less than $1, yeah.
Well, there's bank feeds now. There's open banking like already here, and coming more. There's no reason why an AI couldn't stay connected to the open banking, do all the allocations in Xero.
Yeah.
Like LLMs are very good at classifying transactions.
Yeah, I've seen.
Very good.
Yeah. It's more about, like you said, it comes down to service. It comes down to, you're not an accountant, but you're an advisor now. You're a mini coach along their journey, which is important. So you become part of their business.
And you need to be sometimes a bit of a counselor too, right? I imagine in your job, you're
going to no idea.
Yeah. you're having to field a lot of the, frustrations that they're feeling about different things. And it might be people from their team, or it might be, business partners or whatever.
And you've got to not only counsel them, but coach them through that.
Yeah.
There's so many different things that we deal with every day. They might be friendship breakup or spouse breakup, or sometimes they complain they're making too much money and then there's too much tax and they're not making enough money and there's not enough tax.
Gosh, don't we all wish we had that problem? Making too much money.
Yeah. So it's about just, I think, that relationship. People want to be with people. I don't think that will ever change. Yeah. Obviously, the automation's there for a reason. It's, if that gives us efficiencies to do the job, we can spend more time with them one-on-one around the table.
Yeah, more CFO related style, like integration in the business.
Yeah, or just
helping them grow and
telling them about what we've learned along our journey, or what the experience I've got across all of the clients. What happened when they wanted to market. Yeah. What happens when they wanted to build their brand. What happens when they wanted to put in their SOPs. What happens when they wanted to employ a general manager. We pull on our experience and give them that. while talking about obviously their numbers, because that's the foundation for them. Their foundation is making sure that they're going to have enough money in the bank account to see if they want to expand, or do they need capital? Does the capital come from within, or refinancing their home loan, or from an external party like an additional shareholder? These are some of the conversations that they feel more valuable than just doing their BAS.
I want to ask you, while we're talking about business partners and potential investors, like, you would have seen it all, right? You would have seen, people get into business and then things don't work out. You would have seen really good partnerships that work, business partners,
Yep.
And you would have seen the same across people taking investment from either venture capital
Silent partner,
or angel investors or private equity or whatever it might be.
Yeah.
If we can segment them into two different questions for a second. So what are the common trends or traits about business partnerships that you've noticed that do work well? Mm-hmm. And what are the common trends that you notice that where things don't go well?
So in terms of the ones that go well, we often find that in the partnership, one of them is really good on the tools and one of them's really good in the office. Yeah. Because that's from a construction background. Because you need to make sure that your house is in order upstairs before you can get everything working outside. So we find that they work really well in terms of investment. If you've got, you can break up shares in terms of voting rights and things, so that they can't vote at shareholder meetings. So they're just a silent investor. If you want to fast track your growth and you need capital to do that, I think that's where a lot of people hesitate, because it's like, it's my baby, it's my business. It's better to give away 10% now in order to grow by 1,000%.
Yeah.
So we see that often, that they don't want to take someone else's money, unfortunately, even though they've got the advice, or someone's got, even a couple of $100,000 in capital could fast track a lot of the work early on, saving months, if not years, to get to that next level of scale. Where they've got multiple shareholders, so we've got a lot of clients that have maybe 4 or 5 shareholders, it's very hard to please everyone. So we're always seeing, paying dividends or not paying dividends, or keeping money in the company to go to the next level, because every individual
they have their own needs.
Their own need, right? They might want to buy another investment property, so they need that $100,000 dividend or that $200,000 dividend. Where the other guys are going, no, let's keep it in there. Let's keep the $1 million in there, and let's advertise more to get more sales to boost it to the next level. And then you've also got the investors that don't want to spend. So again, that might inhibit the growth of the potential early on. For us, it was, we realized that we needed a business coach. So part of that was business is business, and we needed a general manager to run our organization and assist me. And that's allowed us to get to the next level.
Yep.
Again, you're buying back your own personal time. Now, businesses go through pits of cash flow. They go through piles of cash flow where you've got a lot. There's two differences. One's artificial, one's organic. So artificial pit might be the implementation of a CRM. It's not cheap, right? Especially if it's purpose built. Do we go out and spend $40,000 to do that? Organic growth, unfortunately, is where the business is just fallen beside. But going back to it, we see multiple businesses hinder their growth potential because they don't want to go into a partnership. They don't want external capital because they think they want to do it all themselves.
Yeah. And look, to be fair, I think there's just so many horror stories of business partnerships going bad and investors being nightmare to deal with and all this kind of stuff. But I think that there's a way to mitigate that, right? The importance of a shareholders agreement and making sure everything's clearly articulated, and people's rights and responsibilities and expectations are documented and well agreed upon. I think if you get that part right up front,
absolutely,
you're increasing your chances. But yeah, it is a very interesting space because it's even taking debt out in the business. People go, interest rates high or whatever. It's okay, but what is your return on capital in the business? It's Or if I put in marketing, I put in $1 and I get $5 back. In
I'll be doing it every day.
You like what? 10% interest rate is too high for unsecured working capital. That's crazy. It's not too high.
It's funny when you think like that, right? So if you went home and you bought a house and you got a massive mortgage, they would congratulate you. So if you went and said, I put down 200 grand and I got $1 million loan, that I've bought a property for 1.2 and my repayments X, everyone would congratulate you because you got bricks and mortar. If you went home and said, I got a $200,000 commercial loan, they'd be like, do we need to sit down with you and counsel you? Are you okay? Like, it's just the mindset, especially in Australia, because we believe in bricks and mortar.
It is that. And it's also like, you know, maybe the fact that businesses, you know, maybe the nature of them is there is always an element of uncertainty.
Of course.
But, you know, property is the same, essentially. Like, you know, you could be in a situation, you could be underinsured, you know, and then a natural disaster happens.
Unfortunately, in Queensland right now.
There's a lot of that stuff happening. So property has its, you know, every investment, like it's all risk. If you're trying to generate money, it's always a risk versus reward ratio.
But we're in one of the best countries. Like, you could always fall back and you're always covered, right? Schooling could be free here. Health is free here. So we're in one of the best countries to fail.
Yeah,
you know,
that's true.
As long as you're always, and that's again part of the coaching system, because you're developing your own IP. So if it happens and unfortunately you do fail, you could start again. Then you jump to stage 6. You don't have to go through 1 through 5 anymore because you've been there. You've done that.
I want to ask you, you spoke about business coach before. Do you have a specific methodology that you guys follow? Like, there's different coaching systems that I've seen and worked with before. Like, you know, you've got EOS and you've got Metronomics and you've got, like, there's all kinds of different ones. And they're just like operating systems for how businesses should run.
Yep.
Call it a rhythm of the business. You know, this is our frequency, how often we catch up. Here is the structure of the meetings.
Yep.
Do you guys follow a specific one, or do you encourage businesses to follow?
No, the thing that I follow personally is someone that can do it. So not one just teaches.
Okay. Yep.
So they've proven that they've done it for themselves before they go out and, you know, try to sell that.
Yeah. Because there is a bit of that too, right? There's a lot of business coaches that never build a successful business.
Yeah, they'll tell you they have 10 businesses, but they don't. You know, just to look the size of what they need to look at for social media purposes. So if you've got that in the background, and, you know, they say that teachers teach, where people that, you know, we prefer someone that can show that they've proven that they've built businesses or bought businesses or got shadow equity in businesses. You know, you want to make sure that they have that behind them. Another thing is to make sure that your coach or mentor or your business coach is relevant to your industry as well. Because a coach for hospitality could be so different to a coach in accounting, for argument's sake, or in construction. You know, they need to be tailor-made to that industry is what I would suggest as well. If they say they do everything, they do nothing. So they need...
Yeah, this is jack of all trades versus specialist. Like, I always laugh when I hear finance brokers say that they're a specialist in residential, commercial, and asset finance. I'm like, hey man, we have 90 lenders in asset finance.
Yeah.
And then residential is like reasonably similar. Let's say 60 plus lenders most brokers will have, maybe 40 even.
Yeah.
Doesn't matter. And then commercial is like an even wilder space.
Yeah,
like
absolutely.
There's so many private lenders and like it's a nightmare.
But they're a specialty of everyone.
And and so they'll say we're a specialist in residential, commercial, and asset finance. It's like, there's no way you're a specialist on, call it minimum 200 lenders. And then each lender has multiple products. Let's say they have 3 products each. There's no way you can be a specialist.
You can't be across it all.
Products.
Yeah, that's right.
It's just not possible. And but you know, I think that usually tells me that they haven't found their niche, or it usually tells me that they're smaller in scale.
They may be starting out.
Because when businesses are, it's like we're niche into asset finance. We do car loans, personal loans, business loans, equipment. That's it.
Yep.
Those are the 4 categories. And you know, like, for example, in personal, there's like all different loan reasons, and, you know,
yeah, of course,
you know, it could be for a boat or a jet ski or whatever. Like, it's still
never buy a boat.
But we don't do property lending. We just don't do it.
Yeah.
And we leave that to the experts. We don't do commercial property lending either, like residential or commercial property. We just do the asset finance. That's it. And we're a specialist in that area, and we think that's niched down enough so that we can be a specialist. And we think, like, with the traction that we've got as a business, we can safely say we're a specialist in that. But if we started to say we're a specialist in this, specialist in that, there's a lot of businesses that make that mistake.
Yeah. And a lot of coaches, like we said as well, that they can coach for any type of business. But when you actually you need to get right in the grid of, like, for construction, do you do tenders? Do they have subcontractor statements? A coach of a generic nature wouldn't be able to identify those. And that's why I'm saying the coach, if you're going to get someone, needs to be industry specific.
I agree. The network they would have, they would have seen problems in similar businesses that they can solve. I do agree. And there is value. I think if you do it, if it's done right and you can see value, I think people sign up for contracts that lock them in for a period or whatever. And I get it, because, you know, the business coach needs enough time to demonstrate that they can provide an outcome,
make a difference.
Result. But
yeah.
You see that happen, and then it ruins the name of business coaches in general.
Yeah.
As a concept, I think a lot of people should be accepting knowledge from other people, whether it's through mentoring or whether it's through networking and meeting the right people or whatever it might be. Coaches is one tool that you can use for sure. But yeah, I think there's a few out there that pretend to be experts, and, you know, really they just read a few things on the internet and then
that's
claim
it.
they
They've
know how to do it.
They've set up shop to say that they're a coach.
It's much easier to do that, because, you know, if someone else's business fails, it's their capital. It's not your capital.
Yeah.
You know, you still go home and you still get your invoice paid and all those kinds of things. So
I think, like I said before about developing your own IP, you know, you can go back to just books. A lot of people, I understand, reading your social media and things like that and podcasts. But if you can read a book about, you know, leadership or how to be a small business CEO, you know, you got to remember that these people have taken years to write the book. If you can read it in, say, 3 weeks, you've been able to absorb that knowledge in order to make small changes in your business, little shifts that can make a greater change in the long term. And that's what I'm trying to do personally. I've set myself a goal for 26 books this year, one every fortnight, right?
that's a lot of books.
Yeah.
Yeah. Are you like physical book or audio
I'm
book?
physical.
Yeah.
Yeah, because, you know, while I'm driving, I'm thinking about, you know, the ADHD kicks in and it's like I've got 20 things to think about. So, you know, you got to give yourself the time. And I like to write in the books while I'm there and highlight like a textbook.
That's the one part I miss about physical books. And usually what happens is if I'm going to listen, because I'm an audiobook guy, but I'll buy the physical copy. And if I really like the audiobook, I'll then try and read it.
Do you read and listen?
No, I don't. Not at the same time.
Yeah.
But I'll listen to it first. If I really like the book, then I'll bring myself to read it, just so I can highlight all the parts.
Yeah.
So if, you know, there's like lots of leadership books, or, you know, so many different great books that I've read, business, sales, whatever it might be. And every now and again, you're stuck on something like, I'm just going to go back to that book, and you've highlighted it and you've done yourself that favor of like pointing out the 10 or 15 concepts in the book that are, you know, really, really relevant to you and that you've taken something from. And I just find a lot of value in sort of post-it notes, highlight, that kind of stuff. But I find it really hard to carve out time to physically read the books. Whereas if I'm in traffic, say I go to the gym, listen. You know, you just like, I can get through a podcast in 2 days. You know, like with Sydney, the way traffic is, and how much travel I do for work and stuff. It's very easy to get through an audiobook in 2 days. There's no way I can physically
read
or a podcast. There's no way I could do that in, you know, obviously some books are much longer and some are, you know, but there's no way I could do that with a.
Yeah, it's about just setting the, you know, discipline to set the because I've learned over the time about how I intake that information.
Yeah. And
that's coming back through university and then through chartered accounting about I need to read the text and highlight the text and rewrite it. That's how I personally learn the best. Yeah. I still listen to audiobooks and podcasts, don't get me wrong. And I appreciate that, you know, you can do a lap of the bay and you can get a whole tutorial out. But it doesn't go into my brain, at the back of my brain, that I can regurgitate what comes out of that book. I just get up, you know, before the kids get up on the weekend.
Yeah. Okay.
You know, they're up probably 7:30, 8 o'clock. I'll still wake up on a Saturday at 5:36 as per normal. Like the body clock gets me up, and then I just have that couple of hours of self time.
Yep.
Or
That's
when
usually what happens when you're a dad, eh? The only time you can find
is when they're sleeping.
Yeah, is in the morning.
Yeah.
You know, it's like when you get home, they're so excited to see you, and there's not much time for yourself. when you get back from the day. And
That's a great feeling, though.
Yeah, it is. Yeah.
And it's just about discipline. It's about making sure that that's your time, that you've, and you, again, goal setting, good or bad, whatever, however you want to see that. 26 is my number. So I'm working towards, we're already at April. Easter's going to be here. April's finished already. Before you know, it's going to be 30 June, kick off July for accountants again. So it's about, just making sure that there's a consistent approach there. Like anything in life, consistency, whether it's sport, training, gym, work, everything's just about consistency.
That's a really good point. And, we're massive on goal setting as well. I think it's really important. If you don't write them down, because some people go, oh yeah, I got them in here. You should write them down somewhere in your phone, or you just make them very well known, very well accessible. And I think a lot of people don't do that, but it's really, really important for you to actually set out. Like if you're sitting, and how I phrase it to our team is like, if we're sitting here at the end of the year, it's just Christmas, and you go, okay, was it a good year or a bad year?
Yeah.
We're so critical of ourselves. We'll always remember the bad stuff that happened in the year.
Yeah.
But we don't actually remember all the things
good
that
stuff,
we did tick off.
all the changes that you made.
But if you've got your goals there and you've ticked off all of them, you go, you know what? Yes, there was some, shit that happened, and there was some bad things that didn't go my way and whatever else, but I did tick off all these goals.
Yeah.
So it was a good year, and it's just a good way to measure where you're at and keep yourself accountable as well.
I think it's just setting those, don't forget to celebrate. And it doesn't have to be, I went to Japan for 6 weeks because I hit that goal or that revenue target. It could be something personal that, you bought yourself a nice tequila. Yeah. It doesn't have to be over extravagant in terms of the celebration. But I think that sets something in our brain that we can remember that we did well as well.
The feedback loop is important.
Absolutely. Because then
reward systems in your brain remember chasing that.
Because we're go-getters, right? We're small business operators that it's like, what's next? What's next? What's next? And like you said, if you don't reflect, it wasn't too good of a year, but you forget about all the systems that we changed successfully, businesses that we might have acquired during the journey, new team members that have come on, size of organisation, implementing SOPs is massive. So there's so many things that you could look back on and say, actually, it was a good year for us.
So we have a tradition on here, and I'm going to sort of give you some advance notice, but the tradition is that we'll give you, to wrap up, you got to pitch yourself in 60 seconds, like your offering. So you got to tell us why somebody should use Falanga Co. But before we get to that, I'd love to hear more about where you see your business going, like as an owner. How big do you want the team to get? Like, what are the metrics that you're sort of looking at? How many clients do you want to look after and service? And so if we're sitting here in 3 years' time, and we get to do this again, or maybe it's shorter than that, but we're like, there's the clip of you saying you're gonna do it. I
think like you said, in 3 years, our goal is at the moment is acquisitions. So we're an older generation in Australia. That's 60 to 70 years old, that they're still business operators and they don't want to pass the business on, or their kids don't want to take over the family business, and especially in accounting. So we know that we've got a good product. We know that we've done our homework in terms of operations and SOPs, implementation of our production software. We know that the clients communicated to regularly, so we've got that service attribute towards that rather than just be transactional. I think in 3 years' time, we want to be hitting that $10 to $15 million turnover. Yeah, and that can be done organically from referrals that we're getting, things like podcasts that we're doing today. But if we want to fast track that, that's going to be acquisitions.
Yeah, for sure.
We can't, it's very hard to deal in accounting and buy someone for free and then, work their way out or pay them over years. Accountants want their money up front. So we've actually just successfully done our first one, which is great. And now we're in the transition of transitioning all those clients. So that's something new for us as well that we've never done internally. So learning from what we can do from day 1 to day 60.
Yeah.
In terms of, giving their current clients who've been them with for 20 to 30 years, right? How do we show up the new kid on the block and say, hey, we're taking over, but we offer all of this value?
Yeah. That is hard because people become loyal as well to their accountants, and sometimes it's warranted and sometimes it's totally unwarranted as well, because they're like, oh, you do all this stuff. My guy didn't do any of that.
That's right.
But I'm still loyal to them for some reason, you know? It's a weird thing.
So many times you get a new client, you're like, oh, how long have you been shitty with your accountant? And they're like 5 years, and you're like, so you're just coming to terms with that now? It's because it's like this, it's harder to get divorced than it is change accountants. You know, too many people think, oh, my accountant's got my secrets. My accountant's got my books and records. Well, there are no books and records anymore. It's all online.
Online,
So there's nothing like the old days. Anything in terms of secrets or, you know, he hid the Christmas party expenditure for me 1 year or something silly, right? But yeah, for us internal, where we want to get to, and you know, we've got our own goals, Alessia and I, is probably, you know, about $10 million turnover.
Yeah.
Probably, you know, that we do see offshoring a lot in our industry. We also, you know, some of the bookkeeping is done offshore. But we want to be able to turn our accountants into coaches because of the AI space and what it could do to or will do to our industry. So whatever we need to do in terms of getting the right advice or right coaches now to coach our managers is vitally important.
Yeah, that's amazing. I think it's a good strategy. If your business coaches are training your accountants to be business coaches, if that makes sense, then they're going to be able to add value and provide that support.
And that's all people want. People-to-people relationship where they know they can call and get that sound check, because they're listening to, the business owners are listening to their own podcast. So they're already, you know, trying to see what might work for them. And we're just a sound check.
Yeah.
You know.
All right. I hope you're ready. So
I'm definitely not.
In 3 seconds, I want you to give us the best 60-second pitch on why somebody should use Falanga Co.
Why someone should use Falanga Co. Well, we know what we're doing. We've shown that in, you know, the last 15 years of operation. We've got a fantastic team that I stand by. Our culture is brilliant. We've got a lot of experience in terms of our own personal growth that we pass on that information to our clients. We're more than just the standard accountant where it's not transactional. There's actually a relationship built in that process. And we're always looking to improve client operations and assisting them in their growth.
Amazing. Thank you so much. I
Thank
really
you.
appreciate it. This has been great. And sorry it's taken so long to sit down.
We're still neighbours. It's okay.
I'll see you back at the office then.
Yeah, I'll race you back.
Thank you.
Thanks, mate.
Really
Cheers.
appreciate it.